Let us discuss about Post Office Monthly Income Scheme along with the latest changes done in Budget 2023 with effect from 1st of April 2023. Post Office Monthly Income Scheme is a scheme where you can invest a certain amount and earn a fixed interest every month. It can be opened in any post office in India. It is a low risk and highly reliable scheme which generates steady income. Now let us see about the details of the scheme. The account can be opened by a single adult. A joint account can be opened up to 3 adults. A guardian on behalf of minor and minor above 10 years in his own name can open an account. Account can be opened with a minimum of rupees 1000 and in the multiples of rupees 1000. Changes done in Budget 2023 which are effective from 1st of April 2023. The maximum limit in a single account is increased from 4.5 lakhs to rupees 9 lakhs. Deposits in all Post Office Monthly Income Scheme accounts opened by an individual should not exceed rupees 9 lakhs. The maximum limit in joint account is increased from rupees 9 lakhs to rupees 15 lakhs. Each joint account holder will have equal share. For example, if 3 individuals open one joint account and invest rupees 15 lakhs, then each person has a share of rupees 5 lakhs in that joint account. Interest from 1st of April 2023, the interest rate is 7.40% per annum payable monthly. The interest shall be payable on completion of a month from the date of opening and so on till maturity. For example, if a person invests rupees 9 lakhs on 4th of May 2023 in his post office monthly income scheme, then he will receive interest of rupees 5550 every month from June 2023, 4th day of every month, that is 4th June, 4th July, 4th August, etc. So you can see how I have calculated 5550. It is 9 lakhs into 7.4% rate of interest divided by 12 months. Interest is taxable in the hands of the depositor. Now let us see the conditions of maturity. Account may be closed on expiry of 5 years from the date of opening. If the account is closed after 1 year and before 3 years from the date of account opening, a deduction equal to 2% from the principal will be deducted and the remaining amount will be paid. For example, if rupees 9 lakhs is deposited, then on premature closure, rupees 8.82 lakhs will be paid by the post office after deducting 2% from 9 lakhs. If the account is closed after 3 years and before 5 years from the date of account opening, the deduction equal to 1% from the principal will be deducted and the remaining amount will be paid. No deposit shall be withdrawn before the expiry of 1 year from the date of deposit. Now here I have shown the amount invested, the interest to be received per annum at 7.40% and the amount received every month in post office monthly income scheme in 3 different columns. I have highlighted the amount invested of rupees 9 lakhs as it is the maximum amount which a single account holder can have, and I have also highlighted rupees 15 lakhs which is the maximum amount a joint account can have. Now I request you to pause the video and see the details. Thank you. If you like the video, please click on the like button and subscribe to my YouTube channel.